WTI crude oil, commodities futures. What happened on this day in USA? Brent is intact, but why WTI fell? What happened on MCX trading? Crude oil basics. US is the largest producer of crude oil in the world. Saudi Arab is the largest exporter of crude oil in the world. To fix the price of crude oil by quality and origin, the following are used as references: Brent crude oil of the North Sea, West Texas Intermediate, WTI US oil in Oklahoma, place is Cushing where it is being stored. Third, Dubai Oman crude and OPEC reference basket. All oil in the US are shipped to Cushing in Oklahoma by pipes and thereafter being transported to all states in the US by pipelines. There's an extra transportation cost involved for WTI compared to drilling on seas where they are not directly loaded to tankers from the seas. Organization of Oil and Petroleum Exporting Countries, OPEC, and the Petroleum Lobby regulate the production and supply and finally the prices of oil. As overproduction is not done and prices of crude oil is kept higher or stable, the actual demand is really so low. And there is a cost of carry if the buyer wants to pay to stock your physical commodity after purchase. The price increases month by month if the buyer does not get physically delivered today. But for crude oil, it is a backwardation of prices, meaning next month price of contracts are normally lower or near to the present month prices, unlike most other commodity futures contracts. Even the national companies also reduced their capex for the first time as oil is not a lucrative industry now to invest. The world is striving to switch to green energy. Finally, COVID-19 or corona epidemic has shut down everything including humans to stay indoors. Finally, to say that the supply is so high and the demand so low. Physical markets are a result of demand versus supply of crude oil. At present, 30 to 35 million barrels a day is the demand. In the corona epidemic arena, demand is grossly depleted. On the supply side, the production remains the same even after the historic deal by US, Russia and Saudi Arab on 13th April to limit the production to 9.7 billions per day of supply. But in the financial markets, on 20th of April 2020, on the expiry of May month contract, approximately 11 billion USD in long positions were there. There are no further buyers of crude oil for trading. At closing date, there was a selling pressure and prices went down heavily till negative values. This happened only to the WTI crude futures and not to other contracts of oil or commodity. Reason cited: US oil at Cushing, there is no space for storage. There are no buyers of WTI futures contract. Why WTI fell? In the US, the WTI futures contracts opened lower and continued to trade lower until negative values to minus 37 USD a contract till its closure time. The negative values were because of the expiry date settlement of contracts on financial markets trading, as no one wanted to buy more or keep the rollover or keep for rollover to the next month contract. Those holding long sold them abnormally. Due to continuous selling of contracts, the prices fell from formidable 20 USD to negative 37.63 USD at the end of the day. In the physical market, there is low demand of oil due to coronavirus epidemic world over with no space for storage at Cushing in US. The Brent prices were trading higher on the same day, but WTI traded lower. These prices normally move together. A similar event had taken place in 2011, but in those days, trading oil contracts took delivery, but currently 98% of the trading does not take delivery. Have a look at the slide where oil tankers throughout the world are stranded along the coasts due to low demand as on April 22, 2020. Let's come now to the MCX crude oil. Almost all of the crude oil contracts in India are traded through Multi-Commodities Exchange MCX. The settlement of the MCX contracts are as per New York Mercantile Exchange front month contracts price at expiry date. The Chicago Mercantile Exchange COMMEX had issued an information on 15th of April 2020 that some energy future contracts of New York Mercantile Exchange can be traded at zero and negative values. MCX does not have the technology software to handle the negative values while commodities trading. Neither did MCX inform the Indian traders about the same or foresee this problem could arise. Multi Commodities Exchange Clearing Corporation Limited (MCXCL) is an wholly owned subsidiary of MCX to provide clearing and settlement services to MCX. On 20th of April 2020, MCX April contracts of crude oil expired. MCX trading hours in India are up to 11:30 p.m. IST night, but due to the coronavirus epidemic, the MCX closes at 5 p.m. Indian Standard Time. On the same day in US, the corresponding WTI future contracts open at an equivalent time of 7 p.m. The Indian Standard Time is plus 0530 hours. In US, the WTI opened lower and continued to trade lower until negative values to minus 37.63 USD a contract till its closure time. If MCX trading markets had remained open, maybe MCX traders might have settled their contract by 11:30 p.m. IST that night before the zero or negative values. The negative values were because of the expiry date of settlement of contracts of financial markets trading, as not much wanted to hold the contracts for rollover to the next month. MCX traders expected at 5:30 p.m. Indian Standard Time the value was rupees 965 would have reduced to zero or as a maximum risk case, and that would mean a maximum loss of 96,500 or rupees 1 lakh approximately per lot of crude oil on closing or expiry. On 21st of April 2020, MCXCL settlement price had been arrived at converting the New York Mercantile Exchange crude oil front month contract settlement price of negative 37.63 a barrel to negative 2,884 per barrel or a lot. Now, the total losses would be 965 plus 2,884 points, that is equal to 3,849 points. At MCX, there were around 11,000 crude oil contracts with long positions, which remained open and were expected for rollout for the next month contract. Therefore, the gross loss as per market experts for the April month open contracts will be around Rs 423 crores. It has a significant impact on the traders and economy. Thereafter, MCXCL initially decided to settle at Rs 1 per contract on the losses, but later on they blocked the amount against the deposits by those brokers who held long positions to meet the final settlement with negative values. Securities and Exchanges Board of India (SEBI) had advised MCX to allow traders trade at negative values, but the stage for it is not set now for traders because of technical glitches. The traders are warned that due to recession world over, there are sharks, vultures awaiting to snatch away your little amount of savings and thereby utilize them carefully. Like us if you like. Notes provided at the description. Thank you.